You just started your first business and you're wondering, well, what do I do now? Well, here are the 5 things to keep in mind to make sure that you get your business started off on the right track, are able to monitor the health of your business throughout the year, and are ready come tax time with all the things you need for your new business. Number 1, do you need to set up an LLC for your new business? This is probably the most common question I get, and at least from a tax perspective, the answer is no. You don't need to have an LLC to have a business. You simply need to have a business with a profit motive to have a business. And if I don't have an LLC, if I do not have a legal entity under which I'm operating, then that means I'm operating as a sole proprietor under my own social security number. And that's totally fine. I'm not entitled to any more deductions with an LLC as I am as a sole proprietor. But does that mean an LLC is a bad thing? Of course not. So in regards to taxes, it is not crucial that you set up an LLC. But from a legal perspective, it's not a bad idea to set up an LLC. It creates some separation between you personally and the business. It also provides some of that limited liability protection. And not only that, it provides a little bit of legitimacy to the IRS that you are treating this business endeavor in a business-like manner. I'm even setting up a separate legal entity to operate this business out of. Number 2, set up a separate bank account and credit card for this new business. If you've created an LLC, it'll be very easy. You're going to go create a bank account under the name of that LLC. It may be difficult to get a credit card in the name of the LLC that has been newly created. But if you want to have a credit card for your business, go set up a personal credit card and use it exclusively for the business. That is totally okay. Eventually, after a year or 2 of seasoning of that EIN, you should be able to get a credit card under the name of the LLC, and you can go ahead and do that. But don't worry, if a credit card is in your personal name being used exclusively for that LLC, that's allowed as well. But even if you haven't set up the LLC, if it's still operating under your own personal name, that's totally okay. Go set up a second separate personal bank account to run all of your business income and expenses out of. And again, same with the credit card, get a credit card that you're using exclusively for these business expenses. Having these things separated from you personally will, 1, not only help you in an audit if that ever were to happen, but 2, it'll make it a lot easier to track all of the income and expenses for this business rather than them being commingled in your personal bank accounts with all your other personal transactions. It will make it significantly easier for creating financial statements at tax time or during the year if it is totally on its own. Number 3, speaking of those financial statements, make sure that you're categorizing your income and expenses in your business account at least on a monthly basis. Having a separate bank account and credit card for the business is great for determining that this is for business and this was personal. But if you always wait until the end of the year or at tax time to determine what all the transactions were from the prior year, it's going to be pretty tough. So at least on a monthly basis, categorize transactions. You can utilize apps like accounting software such as QuickBooks, Xero, Wave Accounting, Zoho Books, whatever's out there that you're comfortable using. And those things can make it really easy because they'll pull in all the transactions for you from your bank account and credit card. And then you just got to categorize them to some kind of expense category or income category. But if you're not comfortable using those, that's totally fine. Just do something that you are willing to do. That could be using a Google spreadsheet or an Excel spreadsheet to just put in a month-by-month listing of all your income transactions and expense transactions and adding some kind of expense category and income category to them. Not only is this good business practice and shows that you are operating this business in a business-like manner, but it also will make it a lot easier at year end to compile all of these months together to create that profit and loss statement or income statement that your accountant's going to need. Not only will keeping track of things on a monthly basis help you better understand the health of your business throughout the year, but it also is good for audit protection. Because remember, when you establish a business, you are saying, I have a profit motive and I'm operating this not as a hobby, but as a business. And if the IRS ever decides to look at your business and say, I don't believe you're actually operating this in a business-like manner. I don't believe there's an actual profit motive here because it's been a number of years and you haven't actually turned a profit. Well, if you can show them that you have been operating in a business-like manner, that you have books set up for this, that you have an LLC set up for this, that you have been keeping track of all your income and expenses, been keeping everything separate, and you are clearly operating this with the desire for profit, you just haven't turned that quite yet. All of these things bolster your defense. If you continue to treat it like a side project, where everything is running in and out of your personal account, you never really create any separation, you're always doing things at the end of the year, this looks more like a hobby, and you might get those losses disallowed. So keep track of your books throughout the year, not just at year end. Number 4, keep copies of your receipts. at least as many as you can. Do know that your bank account and credit card statements do act as valid receipts for the IRS. But if ever they want more details on a transaction than just the line item on your credit card statement or bank statement, the physical receipt itself is going to be your best defense for that being for business. This does not necessarily mean, though, that you have to have a folder full of physical pieces of paper with all your receipts. If you go to the store, you get a receipt, take a photo of it, put it in a digital folder, and you can throw that away. That is also a physical receipt of that purchase, and that will work totally fine if ever you are audited. Do understand this, though, about receipts. Just because you don't have a receipt for an expense does not mean it's not deductible for you. There is something called the Cohen rule. So even if I can't produce a physical receipt for something, or even the line item on my bank statement or credit card statement, that does not mean that thing is not deductible. But it does mean my burden of proof for it may be a little bit higher. And ultimately, that is only if you are getting audited by the IRS on that specific thing. So again, do your best to keep copies of receipts. If you can't, that's okay. Try to keep it all running through your bank account or credit card statement, and don't do a lot of cash withdrawals for things so that there is some kind of paper trail. But ultimately, you're not at a loss just because you don't have all your receipts. And number 5, what do I need to get my accountant at tax time for this new business I started? Well, one thing we definitely don't want is a copy of your receipts. Those are for you, again, in case you are ever audited. We do not need to see them. All we need from you for this single member LLC, disregarded entity, or sole proprietorship is a summary profit and loss statement, an income statement for the year end. If we've been keeping track of things throughout the year, like we talked about in step 3, this should be an easy thing to produce for them, whether from your accounting software or from your spreadsheets. All that it needs to show is, here's my total revenue, and here are all my expenses broken down by category, but summarized for the year in total. And that'll tell me the net profit you have in your business. And that gets filed on Schedule C of your personal tax return. Because you've already followed steps 1 through 4, this is an easy task come tax time. In my opinion, these are the 5 most important things to do as you're getting your business started. You might have some other questions such as, what about the home office deduction? Or can I write off a portion of my car in this business? And those are all fantastic questions to talk about with your accountant. You can also check out my video on how to write off your vehicle in your business for more clarity on that. But at the end of the day, these are great questions to discuss with your accountant once you've got your business up and running. And they should be able to help guide you on what to keep track of during the year and what to give them at year end for those things as well. Thanks so much for watching. Be sure to like, subscribe, comment, and hit that notification bell. You can also follow me on TikTok and Instagram, where I have other tax related content in a more short form. You can also tag me in videos there that you'd like me to respond to. Again, thanks so much for watching. I'll see you on the next video.